All right, listen, whether you have been dividend investing for an extremely long time or you're just looking to get your toes wet, this is a really solid video for you. Now, I've been doing this for a number of years now where I've seen great success with my dividend portfolio, and it's the most fun that I have investing because it really suits my investment profile. Now, for me personally, I like looking at individual companies, right? Like dividend champions out there and dividend aristocrats, those companies who have been increasing their dividend payments for 25 plus years consecutively, and for dividend kings 50 plus years consecutively. Really solid outlook to just start beginning your search. However, there is one investment that I think above all else makes a ton of sense when it comes to investing into a dividend portfolio. Now, before I get into that, I want to talk about an investment that's kind of in the backbone for one of my portfolios here. And I'm just going to share this on the screen here. You can see that this is Invesco's S&P 500 high dividend, low volatility ETF. Now, this is one that I got a lot of backlash for investing in before, especially pre-pandemic. And it's one that's really held up this portfolio quite well. You can see over the past year, this thing's up 0.42%, which at face value doesn't seem like a great return. But when the entire stock market is tanking and not doing well, this is something that has helped my portfolio out so much because I'm still consistently making dividend income from this that I can then reinvest. And, actually, I'm seeing a sizable return on investment. You can see a 26% return, up $589 on this one individual investment alone. Now, when it comes to this investment, would I recommend something like SPHD? Well, I'd actually probably recommend a different ETF altogether. However, I'm not a financial advisor. This is not financial advice in any way, shape, or form. You don't want to just copy blindly some dude on the internet. But I want to talk about this investment because it really has kind of sparked my interest back into dividend investing and has made it so much easier to transition into it. Because for me, for a while, it was trying to find the time to look at individual stocks to understand and evaluate them to know, hey, is this the right move for me? Should I be investing in this company? Do I want to invest in another company? I hate having to have that mindset of needing to go into my portfolio every single day, look at every single allocation, and then readjust, buy, sell, do different things. I want it to be as hands-off as possible, and investing in an ETF that is well diversified with a low expense ratio really helps that out. So let's talk about this ETF. So we're going to be talking about Schwab's U.S. Dividend Equity ETF, or SCHD for short. Now, what I love about this is, number one, the diversification that we will get into here in a minute, but also the really low expense ratio of just 0.06%. Now, when it comes to ETFs, the expense ratio can oftentimes creep up on you. If you don't know what the expense ratio is, essentially when you invest in this pool collection of stocks, it is actively managed, and because it is actively managed, you're going to need to pay a certain fee on that. And sometimes it can really creep up and take a lot out of it, but a fee of 0.06% is relatively fair for an ETF. Now, getting back into some more of these stats, just looking at the dividend yield of this, currently it's at 3.39%. So not extremely high, but not extremely low. And the cool thing about this portfolio is, let's take a look at the companies that it actually targets. So you can see right here, these are some of the biggest holdings that are in the portfolio and how it's broken down. So financials make up 20% of this, industrial 16%, technology, consumer goods, healthcare, so on and so forth down the list. So you can see you got this healthy balance of what it's actually investing money into. And then as I scroll down, you can see some of those top holdings. So you can see on this list, a ton of really noteworthy companies here. Coca-Cola, obviously one of my favorite investments, one of Warren Buffett's favorite investments. You got Home Depot on here. You got IBM towards the bottom, Cisco. A lot of these solid dividend, Merck is a great one, for example, too. A lot of solid dividend companies that have been well established. And that's kind of the guidelines behind what enables these different companies to get into these, is that they are well established. They have a proven track record. And there are three really big requirements that it takes in order to become an investment held within SCHD. So the first qualification to become an SCHD is that you need to have a company that has been making steady dividend payments of at least 10 consecutive years. And on top of that, you need to show 5 years of solid dividend growth. And so it's really cool to think that, a lot of these companies have actually been part of the dividend aristocrat, dividend king family I'd mentioned, and some of them are striving to get there. So you're oftentimes going to see these dividend payments continuing to increase. And it sort of just helps indicate, in some sense, some way, shape, or form, stability of that organization, because dividend payments are actually a portion of the profit that the company recognizes and sends back to shareholders. In this case, it comes in the form through the ETF. And so it's likely that we're going to continue seeing that ETF have a dividend yield that's going to continue growing. Now, as a side note, it's also looking for solid market cap with these individual stocks, and it wants at least $500 million worth, which further establishes that financial stability. Understanding the criteria for any investment that you make is extremely important, but also this kind of does the work for you, because it takes a look and filters out companies based on their free cash flow to debt ratio. It also is looking at the return on equity, the dividend yield, and that consistent dividend growth of over 5 years. So you already know that the companies that you likely wouldn't be invested in kind of get weeded out through that process. So we also know that there is such a big emphasis on that dividend payment for this ETF in particular. That's what draws a lot of investors to it as well. So they filter by that, right? So you look at the list of stocks that actually meet this criteria, and they filter out to make the top 100 highest dividend payers, and that is what comprises the actual ETF. Now, one thing that I also like to do is just compare investments to the S&P 500. This actually looks at SPY as another form of a comparison tool here. And a couple things to notice about this: you can see the expense ratio on SPY on the left-hand side of 0.09% is higher than that expense ratio of 0.06% for SCHD. Coming down into some of this historical data, I mean, that chart says a lot, which I believe is over the past year. What we're looking at, a little bit less than a year maybe. And you can see the huge disparity right there. The green line is SCHD and that purple line is SPY. SPY is down over the past year 9.95%, while SCHD is only 0.10%. And you can see, I mean, looking at data, and you can kind of manipulate it however you want, right? There are some time frames like over the past month where SPY is beating SCHD. But when you look at the past 3 months, that past year, the past 3 years, 5 years, and even 10 years, SCHD is the winner in this scenario. So it's really cool to just use that as another form of sort of justification at looking at these investments. And I would highly recommend comparing it to maybe some other investments that you're looking at too. But it's just really cool to see that stability, especially in times of that volatility, which is what I was focusing on with SPHD at the beginning when I showed you that in my own portfolio. So there's just so many things to like about this investment, whether it's that dividend yield, whether it is the types of companies that it's investing in, the classification that it takes to get into this ETF. You're not going to lose sleep over this investment. It is definitely a set it and kind of forget it. You don't need to stress about it, which is one of my favorite ways to invest, and sort of what I'm trying to get back to, that grassroots of my favorite investing style is just shovel money into the market, dollar cost average, not really stress about those investments. Now, anyways, guys, if you did enjoy this video, I'd really appreciate it if you click that like button. Thank you so much for checking it out, and have a great day. Dividend Champions.